Hi, welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley. Before I begin with the commentary to wrap up September and the third quarter, I do want to extend our deepest concern, thoughts, and prayers to our Asheville team, our Asheville community, and our Asheville clients through this devastating and tragic storm that they're enduring and the damage that has been done to their community. I want you to know that I've heard from so many of our Lexington clients, which they do in times like this, to extend their support, offer their help to our family members, offering help, even our Lexington community. We know how tragic this must be for all of our Asheville community. And seeing some of the pictures and videos on social media and TV is just very saddening. But just know that we do extend our support and look forward to helping when the time has come to rebuild and recover. That being said, just to wrap up the month of September and the third quarter, there is some positive news with the stock market. The S&P 500 is up 21.7% year to date after now having 42 new highs, which is the 8th best start to any year. For the quarter, we were up 6%. And albeit that's in a quarter that typically doesn't give us good returns, September tends to be the worst month of the year. And even through that, we still extended these gains. That being said, what's fueling this? Well, just as we had said in our themes this year, one would be the Federal Reserve. And yes, we finally got our first rate cut, which is the first cut in 4 years. And the Fed gave us a little more than we anticipated. They cut by 0.5%. We were thinking maybe 0.25%. Although we did think the first cut would come in July, so maybe they're catching up. So 0.5% was the cut. Interest rates are coming down. The economy is slowing a bit, but still growing. And that was the second reason we've had such a good quarter. Second quarter reports for earnings of companies we saw in August and pretty much wrapped up in early September were very positive. So those two things, lower interest rates and looking forward to more Fed cuts in November and December, and then moving into 2025, is giving this market some optimism, continued optimism as we move forward. That being said, remember the stock market is a forward-looking indicator, tends to look out 6 to 12 months in the future. And so these cuts were anticipated, and a lot of the growth that we saw in the first 3 quarters of the year will probably slow down just a bit. We'll finish positively, of course, but maybe not see the gains that we've posted so far. The shift in leadership, though, has been much healthier for the market. Instead of just the big tech sector, we're now seeing the stock market broaden out. And the leaders, the sector leaders for third quarter were real estate and utilities, which are interest rate sensitive sectors of our economy. And with lower interest rates, those sectors are now outperforming. So look more for a broadening of this stock market, consumer staples, healthcare, those type of sectors will continue to be positive, as well as financials as we move forward. Energy, as you can imagine, if the economy is slowing, maybe fuel and oil prices are moving down, so we might see some moderation there. But overall, we anticipate more positivity through the remainder of this year. The final thing I will comment on will be the election. As we said in the very beginning of the year, presidential election years create volatility because they create uncertainty. And with this race being so close, we do anticipate volatility as we get closer to Election Day on November 5th. As long as we have an election that brings a result, we anticipate that the market will move forward and continue to focus on the economic data and give us some positive returns. That being said, I will join you again at the end of October for Round the Table with Gratz Park Private Wealth. Take care.